Hello, everybody. Tony here. The Nasdaq rebounded from early losses on Friday as investors stepped in to take advantage of the recent dip in tech stocks, while hawkish remarks from Fed speakers weighed on the interest rate sensitive Dow Jones. With the US government shutdown now ended, this week we'll see the resumption of economic data, which will provide insights into the health of the US economy. In the stock space, the US September quarter earnings season is now roughly 92% complete, and it's been a good one with 82% of companies beating expectations compared to an average of 76%. The quarter three earnings season continues this week, and we'll see reports coming from the big retailers, including Home Depot, Target, Walmart, and of course, AI chip monster Nvidia. Let's take a look at the charts of the Nasdaq and S&P 500 to see where they are as we start this new week. Okay, so we have looked at this Nasdaq daily chart quite a lot over the past 3 or 4 months, and you can see the rally from the April lows took it up to this 26,182 high coming in late October. Now, since then, we've seen a gentle pullback in the Nasdaq. It's had a look at this support area coming in around 26,500-ish, reinforced by this low over here a couple of times, but it's rebounded to close back above 25,000, which has been, for me, just a sign that there is some indecision in the markets as to whether this does mark a medium-term high or there is another push high to follow. So what I'm watching for this week is, firstly, we are once again looking for a confirmed close below 25,000. It still hasn't done it. And we would also be looking for a break below the low which we saw last Friday and the one the week before on the Friday. So that comes in, let's say, around 24,500, being reinforced by this 24,200 low. So what I'm looking for is, I guess, a couple of things. We want to see a break of these lows and a close below this 25,000 area. And what that would then do was it would increase confidence that we have struck a medium-term high and that we're seeing a deeper pullback into the end of the year. Now, that deeper pullback would be targeting these lows we saw here in early September, coming in around 22,300. If it was to see further weakness, then you have a low over here coming in around 22,673, which is being reinforced by the 200-day moving average, now sitting around 22,260. But again, we need to see a few of these levels fall in pretty quick succession. We have, as I said, seen a couple of tests, but a rebound, a test and a rebound on Friday night. Now, for the S&P 500, a similar state of affairs. The rally from the April lows has taken it up to this high in late October around 69.20. What you can see on this chart is I have put in place a bit of a shoulder, head, shoulder, potentially a topping pattern. But what we're also focusing in on is this 65.50 level, which has been the support level we have highlighted over the past 3 or 4 weeks. Had a push down 2 Fridays ago towards 66.30, rebounded, and now we're coming back down towards this yellow line, which is this 65.50 support area. If that level breaks on a sustained basis, then I think we've got the green light for a push down towards these lows from late August, early September, coming in around 63.50. Much below 63.50, then we've got very important support coming in around 6,200, a horizontal level which we saw tested in July and early August. Now, that is also being reinforced by the 200-day moving average, which is currently coming in around 61.50. So again, the levels I'm watching for this week is a break below 65.50. And if it was able to hold above there, then yes, we can push up towards 7,000. But if we see that sustained break, then we're starting to bring some of these downside levels, which I have highlighted, into play. Thanks for listening, and stay tuned for more market updates ahead.